Welcome everybody to another 144 and 360. We're going to start doing this on a weekly basis, and we're going to cover every market and any market just to prove that these Fibonacci retracements are the underlying structure of all markets when you follow the 144 rules and guidelines. We're going to start here with the Dow futures and just take it from the all-time high. First setback up here, failed to make the new high, get up in the 61.8 range, took it down to new lows. What did it hit? 23% back to the 2020 low. We would have been looking for new all-time highs from here. However, as always, we watch all the retracements on every move just to see how weak or strong the market is. In this case, it went up to 61.8. 61.8% rule is to go at least 61.8 the other way, which it did, and went on to new lows. This low here, not a level based on the retracements of the bigger ones, but what you're going to find is that you're going to find more highs and lows at retracements than not at retracements. So here we go on this rally up to 38%, telling you the market is still negative, and we should be going for new lows based on 38.2%. What do we do here but take it down to 38% to the 2020 low, and the market starts to rally from there. Again, 38%. We would have been looking for new all-time highs. First rally goes to 23% back to the all-time high, sets back to 78%, failing to make the new low. Two things here. One, you're still sitting up above a major retracement, and two, 78.6. These are very nice things to look for, both at tops and bottoms, and that is to hit a retracement, fail to follow through on the retracement, and then hit 78%, fail to make that new low, and then it takes off, and that usually ends the down move for the time being. In this case, it sent it all the way back up to 61.8%, back to the all-time high, down to 61.8% for giving us that first target. You can see from here, 38% was all it could do, then down through all our numbers. Now, when this happens and you take out the big long-term levels, it's a major swing point, but plus we have to start watching what's on top in order to see if it is that negative and what should be what to be looking for. So the first rally goes to 23% to back to the all-time high. Not a good sign, but it did fail to make that new low and held here at 78, never closed below it. Not as nice as this one back here, but on we go up through 38 back to here, but here we go. Now this is your actionable level, and that is right here at 31,750. This is not only a Gann square, but it's also 38.2 back to the all-time high. This obviously, after you've taken out 20, or when you fail to make the new low from 23%, you're always looking for 38 of that same thing. And with that same thinking, 38% here should take us down to new lows. And if not, we'll be looking for 61.8 up on top based on the 144 rules and guidelines. So now we'll take a look at the, here we go. Let's see, we're going to go with the NASDAQ and show you what happened here. You can see all these levels, but what I'm going to concern myself or us with right here is, again, you can look at these for yourself. You can put these on your chart, run these retracements, and just see. I'm telling you, more retracements, or you're going to get more highs and lows at retracements than not. And 61.8% took you to 61.8%, almost to 61.8% again, but on they went. So what happened here, and we wrote a couple posts on this, that this level here was so key because it was 38% to the 2009 low, 61.8 to the 2020 in this box here. So on this spike low, we hit the bottom end of that range and had a massive rally in there that continues right now. And at a minute, well, we would be looking for this to possibly be the long-term bottom, but again, we're going to measure it with numbers up on top. Right here, this 11.9, call it 950. You got 23% back to the all-time high as a good target to start. You also have the major Gann square there. And if this level down below gets taken out, much longer term levels down below, we'll try and cover those things for you if possible in future updates. So here with the NASDAQ doing that, now we can come back here and just take a look at what happened with Google and how important these long-term levels are. As you can see, 2020 low, 23%, 61.8, went up to 38% to the all-time high, went down to the lows, and what do we hit? But all-time high, all-time low, 38.2% on that bottom day and where the big spike came from. Right now, as long as we're holding this 95 level, we're looking for ideally up around 117. In any rally that can't get above 23% at 108, not a good sign. So with that one done, that's what's to look for there. And then in Microsoft, same story here. What you got was 38 back, all-time high and low. Again, right in the slow day. It's tough when the market's down that big. It looks so bad down there to start, but when you have these levels, at least you know what your risk is, even based on the closing basis. Again here, all-time high, all-time low, 23%, sends it up to just short of 61.8%. Here at the market, again, 23%, failed to make that new low at 78, sends it up through 38. That hit 58%. That's not a Fibonacci retracement. That's a Gann level. So now down in here. So we're looking for around 269 to start on this rally, and could be a much longer term low here. And obviously not getting above 23%, say the 250 area, would be a negative sign, and you can look for them to go for the lows again. Now here's the thing where we're saying this is the underlying structure of all markets. We just showed you in those markets. Now let's go to the Chinese exchange here. Whoa, just on the nearest, we pull this thing out, you can see what happens here. Ending of the move at 78%, down to the long-term swing point, 38% of the major move in the bottom a year ago. Then you can just start to see 38%, doesn't make a new low, but comes back into the big 38%, 61.8% bottom, 38%, 61 on top, 38 on the bottom, 23% in here. Then it just got so strong, and now 23%, and we failed to make a new high. We're looking for 3,900, but here you are in the Chinese exchange, and no different in what's going on. Now we can take, just to show you once again, now we just go into the hogs. And going back to 2016, 38%. What caused this massive rally? Well, we told our customers in the Grains Weekly that we do that this was a major bottom, or an important one, and that a rally from here could take it at least to 7, or at our long-term target was 78%. But again, here you can see fell short of 23%, went to 78%. We also call this the coming setback in hogs and cattle here. Took this down all the way through to 38% to the 2016 low. Again, got to know the long-term levels as even with the short-term levels. So these are the things we do. If you trade the grains, we'd appreciate it if you come take a look at the Grain Weekly Outlook. These are the kind of things we use in our weekly update. If not, please subscribe to the channel here, and we will be putting out a lot more updates on all the different markets, just about to prove how well the Fibonacci retracements are the underlying structure of all markets. Until next week, Have a good time.